Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. We've been bringing you advanced trading systems such as our SPY and ES mean reversion systems with about 90% winning trades, our amazing KISS systems. We've been here since 2003, over 21 years ago, providing some of the best technical analysis trading systems you will find. Anyway, hope everyone's had a nice weekend. Let's get started with this market video. So this is my back-end recorder for our standard web page subscription for our subscribers. I'm going to go ahead and get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a wonderful weekend. It is Sunday afternoon, about 4:30 Eastern Standard Time, and this is my very comprehensive weekend newsletter where I'll cover the general market, all the major indexes in a top-down fashion, various custom indicators, look at a few sectors, we'll look at the dollar, Bitcoin, crypto, commodities, precious metals, GDX. We're also going to follow up on some recent trade ideas. And earlier today, I sent out a video on YouTube specifically on the silver and precious metals market. So hopefully you watched that. If not, you should watch that. It's a good video because I discussed some of the bigger picture things that we're looking at. Anyway, again, it's currently is May 19th. It's actually my mom's birthday. And so I want to get through this quickly so I can get over there and, sorry, something in my eye, and go do the family stuff. All right. Again, hope everyone has had a nice weekend. And as far as the market, the bull market continues, as you know, in the equities. Major indexes, the Dow and S&P and NASDAQ made new all-time highs last week. The Dow gained 1.25%, the S&P gained 1.5%, while the NASDAQ gained 2.1%, and the Russell small caps gained 1.85%. And it's pretty broad-based. Approximately 19 out of the 21 market sectors that we follow closed positive, with only transports and industrials closing slightly down. I will say it is notable that transports are lagging here, guys. Key events for this week, not a lot of news items, quite honestly. Wednesday, we have the FOMC minutes, existing home sales, NBA mortgage. Thursday, the normal initial jobless claims. We also have S&P manufacturing PMI, new home sales. Friday, which is my birthday actually, May 24th. I'll be 52. We have durable goods and orders and Michigan sentiment. Again, our trading systems here have been pretty phenomenal, I think. Just recently, our breakout system triggered about a week and a half ago, and that's been a nice trade so far, which I'll discuss in a moment. And of course, our KISS trend following systems have been knocking it out of the park. Again, most commodities have been doing very well. The only commodities that have been weak lately have been the agriculture area. Remember, that area had a big move before, so it's been consolidating down. But the other commodities have been on fire. Copper, precious metals, definitely not helping Powell's inflation fight. And of course, the market pundits who want a rate cut, right? Anyway, like I said, guys, no real changes on the market. The only thing I'll say is that the weekly charts are now developing a pretty good divergence on the RSI and the MACD, and we want to keep an eye on that. All right, we are in an election year. Usually the market holds up pretty well in that, especially in May and June. We'll see if that transpires. But again, don't lose your discipline. Always have a plan in place. And by the way, that's why the KISS systems are good, because they give you that plan, that stop protection. Next. Before we get to the general market, let's talk about these systems. So a couple weeks ago, our ES breakout system took a long trade, which I sent out trade notifications to our subscribers. Okay. And last week, I closed out one of the positions on MES futures. It made about 500 bucks, about 100 points. That's a pretty good move. And the current trade is still open. It's up about 83 points with a hard stop at 52.62, which is above the entry. These have been the mean reversion systems trades this year. Not a lot of trades for mean reversion, because the market is at low volatility, but still have done very well. Remember, we run these systems on the SPY ETF as well, which we send out trade notifications. This is just the ES systems because we have this one open system at the moment. We don't have anything open on SPY on the mean reversion systems. But again, you can see if you followed these, and I'm very conservative with these, 1-2 contracts on average, around $14,000 this year already. Next. Image number 3. So here's the ES breakout system. And you can see it went long over a week ago. And it's still long. Like I said, we peeled off one contract last week. We still have an additional contract. Futures are not for everyone. So some of our subscribers will substitute an ETF in place, such as SPY or SSO, something like that. If you can trade futures, they do have pretty awesome tax benefits with the 60-40 rule, where you get to treat 60% of your gains as long-term cap gains, which, as you know, is a big discount on that. Even if you hold the position for a minute, you can still take 60% of those gains as long-term cap gain percentage. Next. Talking about the KISS trend systems, here's the S&P daily system. Again, just a beautiful example of the KISS system. So KISS systems were long last year in the early spring timeframe, got out in August. They did have a little whipsaw there in August, September. Again, they hit their stop. It was a minor loss. They went long on October 31st. Excellent entry there, just off the lows. Rode that whole trend. It did get out in early April, but then it got right back in. And so far, it's set an initial stop, and it's now raised that stop 3 times, protecting those gains. Okay, just a beautiful example of the KISS systems. They give you that plan, that insurance policy. Anyway, we had a little DeMarca 9 there last Wednesday. Little consolidation, not much so far though. You can see where the stop is. Next, here is the triple Qs KISS system, same deal. It got out in early April, then went right back long in early May. And this one has had raised its stop twice so far. Current stop is 435.50. Next. Image number 6. So this is right from the website. Under the system section, go to KISS STS tables. By the way, the mean reversion systems are here, SPY and ES, 22 systems. And anyway, go there if you haven't done so. You'll see a series of baskets. We have the BPT basket and all these other things from all the S&P 500 stocks, and over 100 ETFs, all the Dow stocks, a bunch of miscellaneous things. There's about 750 stock and ETFs that we follow. All right. I mentioned this because there's also about 2/3 of our website are using the KISS systems. There's still about 1/3 who are not using it. And if you're one of those, you've been missing out. You should come here, set some favorites by clicking the star next to the symbols you want. Remember, you can search for your own symbol. Go to the favorites. There's a tab there to check that you'll receive email notifications. And you'll receive email notifications automatically for your favorites based on the KISS systems. They tell you when they go long, they tell you where to put a stop, and they tell you when they're exiting. All right. So here's the basket. You can see the nice gains here. On Friday, GDX, GLD had new smart trailing stops generated. The 9th for GDX, the 8th for GLD, and URA went long, a new long. Also, you see the last trade, so how the KISS systems have been doing. So here's the last trades. So the last trade in GDX was a loser, but so was GLD. Obviously, they're up very nicely now, but nice gains on these other ones. Amazon had locked it. The previous trade on the system was gained 34.7%. Coin gained 30%, or 53%, I'm sorry. Baidu gained 30.2%. You can see these nice gains here. NVIDIA, the last trade, gained 63.4%. Again, there's a couple of losers here and there, but they're small. That's the beauty of the KISS system. Next. Back to the general newsletter. So item number 7 shows the index sector table, what transpired on Friday and for the week. So for the week, again, for the major indexes, the 5 major indexes, you can see solid gains here. 1.25% for the Dow, 1.5% for the S&P, over 2% for the NASDAQ, 1.85% for the Russell. And the 21 market sectors, we use this as kind of a breadth indicator. You could say 19 out of 21 were up. Or industrials and transports were down. Now, transports has really been lagging, and I'll talk about that below, but that is something to watch over time. Currencies, US dollar, nice pullback last week, rallying the other indexes. Bitcoin had a big rally last week, up 9% as it took out that resistance. Ethereum also up 6.7%. The stocks did well, such as MSTR that we've had on our watch list. Commodities, mostly to the upside here. The only real red you see is in the agriculture sector. Agriculture, corn, wheat, sugar. Like I said, that area had a big run previously, got very extended, and so it's been working off that, pulling back. I do think it'll rally again. But the other areas have been rallying. DBC, the index, up 1.85%. Crude oil up 1.7%. Natural gas up an amazing 16.6% for the week. We'd put out the UNG natural gas ETF a while back, and that has done fantastic. Copper up 8.3%. That's a massive move. Uranium up 4.6%. Not helping Powell on his inflation fight. Precious metals, all nice gains, as you know. Gold up 1.8%, 24.17, all-time high, just about. Silver up 9.7% for the week. Now it's over $31 an ounce. Remember, over a month ago, I said there was a big move coming in that area, and it has. Palladium, platinum up nicely. GDX, the miner, gold stocks up. And the 10-year, 30-year Treasury yields, a nice pullback, which helped the market. Next, item number 8 shows the economic news calendar. Like I said, not much news this week. Again, we have the FOMC minutes on Wednesday, existing home sales, more MBA mortgage applications, Thursday, initial jobless claims, PMI, S&P 500, manufacturing, PMI, and services PMI. Next, let's jump to these index charts. The first chart below, item number 9, is a monthly chart of the 5 key major indexes. And this goes back, you can see, to the beginning of that bull market in early 2009. So generally, May is not a huge up month, but this month's been a pretty good month. You can see the Dow's up 5.8%. Big old candle gains here for all the indexes, taking back those down candles from April. Next. Chart number 10, here's the weekly KISS systems. No new smart trailing stops here, okay, but they've done well. They didn't get out in April like the daily index KISS systems because they have wider stops. They stayed put. You can see how price basically bounced right off that ATR almost perfectly where it held support. Next, moving to the individual indexes, here's the Dow weekly view up 1.25%, making a new all-time high. This next high is setting up some divergence, guys. You can see it here on the RSI. Take a look at the MACD here. It is setting up. Again, it can be blown out, but it is there. It's possible that this makes some sort of high, and then you get a pullback. Something to watch. Chart number 12, here's the daily. Up, and away. Next, chart number 13, here's the S&P 500 chart. This is the monthly chart, which is up 5.3% for the month. This channel shows you back to the 2009, beginning of that secular bull market. And not much to say. You know, if price really run away from here, could it eventually test the upper channel? Perhaps. You do still have this potential monthly MACD divergence for now. But again, that's a monthly chart, guys. So I don't trade off monthly charts. It's just something to look at, really. Next, chart number 14. Here's another monthly chart of the S&P. Shows you the same channel, which could be a target later this year. The upper portion of that channel. I'm not a big fan of moving average crosses for trading systems, but this has been pretty good. On the monthly chart, the 8 and 12 EMA for the S&P monthly. You can see they've done a damn good job about catching the major trends. Okay, so it did cross in 2022, but then it crossed right back up in early 2023, and we've had a nice move. Next, chart number 2015. Here's the weekly view of the S&P. Again, where S&P was up 1.5% last week. One thing to note here: this new high we're setting up, we have some pretty obvious RSI and the MACD divergence now setting up. Again, that's not a sell signal on its own, guys, but it is something to monitor, okay? Next, driver 16, here's the daily S&P. Okay, we took out the April highs, as you know, last week, new all-time high. One way to look at this would perhaps be a little wave 1, 2, and 3. So this would be a wave 3. We get a pullback, maybe a 4, and then another move up is a 5, and maybe that'll be some sort of high. All right. But right now, this just kind of looks like a 3-wave, 1, 2, 3. Driver 17, here's the 4 time frames with some of our custom indicators. On the S&P daily up here, we have the Mark 9. Oh, we do have a little resistance cycle right there. You see the dot? That's something to take notice of. ATR is supporting all the time frames now. You can see how on the 78-minute, when we had a Mark 9 last week, price pulled back to the ATR, trying to bounce off of it. We have some A's showing up. That's some amateur buying. Sometimes you get a pullback from there, not always. Something to be aware of. Next, driver 18, here's this 2-hour time frame that we've been showing. So again, the bullish view would be we're in a wave 3 here, and this is some sort of wave 4. Maybe it's a shallow wave 4, or maybe it eventually works down into here. This is now a demand zone, and then we get another push up. Okay. The more bearish view would where we get a little more of a where we have a deeper correction or a deeper pullback would be this count in red. But again, let's just continue to monitor this. Number 19, here's a 60-minute chart. First off, we got a big demand zone down here, and you have an open gap. So again, right now this looks like some sort of wave 3, but you know, this wave 4 here, we'll see how deep that gets. Again, it could just be shallow, or it could be complex and work down to these lower levels. There's an open gap here. So if the market really starts pulling back, that gap would likely be a magnet. It generally is on the indexes, and your bigger supply zone is down here, or your demand zone, I'm sorry. Next. Chart 20, here's a 30-minute chart just with simple fibs, just something to monitor if we start pulling back. Remember, there's an open gap here from May 15th to monitor. Chart 21, here's a 15-minute chart. Moving average ribbon or pinching again right here. Remember last week on Tuesday they were pinching, and then we had that thrust higher. Next, chart 22, here's a weekly chart of the Qs, up 2.2%. Again, just like on the S&P, you do have now in this new all-time high some MACD and RSI divergence to start monitoring. Chart 23, here's the daily Qs. Again, kind of similar to the S&P. Could this just be a wave 1, 2, 3 perhaps? We still need a 3, 4. We'll see. Chart 24, here's another daily chart. So right down here is the demand zone. So if we start pulling back more, this is an area to watch for some support. Chart 25, here's the 4 time frames. Again, similar look to the S&P. The ATR is supporting all these time frames, which prices pulled back to on the lower time frames, 130-minute, 78-minute. The Mark 9 on the half day, where we did pull back a little bit. The Mark 9 on the daily. We'll see what happens early this week, guys. Chart 26, here's the 60-minute view. Again, similar look to the S&P. You don't really have any MACD divergence up here. Could be flagging perhaps, but we'll see. Chart 30 here's, or 27, here's a 30-minute chart with fibs, just like I showed you on the S&P. Next. Chart 28, Russell 2000. This is the weekly chart, up 1.85%. Remember, the Russell found perfect double bottom support around that 160 last year, which it held in 2022. And we rallied up. We stalled initially at the supply zone in March, pulled back, and now we're retesting it again. Chart 29, here's the daily IWM. We had that textbook rising wedge with the MACD divergence, which again played out for a nice pullback there in April. But then we bounced off the demand zone just above that 200-day moving average. We've rallied up, haven't taken out the highs. Pretty good retracement. And chart 30, here's a 2-hour view. Again, nice rally off that support zone in mid-April. Little MACD divergence here at the recent highs. Again, we'll see if this can make a move up to test those all-time highs, or if this ends up being pulled back more. But for now, it looks fine, just a little MACD divergence there. That does it for the major indexes, guys. Now let's look at a few of our custom indicators. Driver 31, here's the VIX. So the VIX continues to melt down, but again, don't just get complacent because the VIX is melting down, guys. We do have some RSI divergence here developing, and a lot of times this RSI divergence plays out. It could be negated, but you do have it there to monitor. And we really need a bounce in the VIX to get the lower Bollinger Bands to slope to flatten out anyway. That would produce a pullback in the market if we get it. Driver 32, here's a 2-hour view of the VIX. Monitoring the steep downtrend channel, there is a little MACD divergence at the moment. So again, you'd want to see a reversal up in the VIX here. We get my notice. Next, here's an interesting chart I've been shown for a while. This contains the VIX with the Bollinger Bands, the VVIX, which is the volatility of the VIX, which has actually been moving up lately, while the VIX has been moving down. And right here is the ratio, the VVIX to VIX. And one thing I noticed is whenever this ratio gets outside its Bollinger Bands, either the upper or lower Bollinger Bands, if you notice, it tends to be near market inflection points. This is the S&P here. You can see how this was at a low. You know, right here you had a little short-term pullback. Then you moved up again. Here you had a low. Here you had a low. Here you had a low. Here you had a pretty good low. And notice price has been moving outside the upper Bollinger Bands for the last several sessions. So this is something to watch. You know, is that showing that maybe we'll have a pullback here soon? Perhaps something to monitor. Looking at some of these systems, here's the NYSI 9EMA crossover system. Remember, this gave an excellent short there in April, early April. It then gave a confirmed buy signal in early May, and that's been working out so far. Driver 35, here's the NYSI indicator as well with the 5-3 stochastic overlay. So back in April, I pointed out how the stochastic there was oversold, and that's led to a nice move up. You can see now it's worked its way to overbought. But that trigger off that candle played out. Driver 36, here's another system chart. This is the BPSPX, S&P Bullish Percent Index with the 9 and 20 moving averages. So here it had crossed up for a buy in early May. That obviously played out. Some other things, here's the CPC put call with the market basically all-time highs. This is getting complacent. It is 0.81. Again, it can go lower, but you know, when it gets outside the upper Bollinger Bands, that's when you get some fear. Obviously, we're way far from that. Everyone's complacent. So be aware of that. Sometimes you get little surprises when people are too complacent. Next, moving to bond market, chart 38, here's high yield corporate. Highly correlated to the S&P or vice versa. Still continues to hold its 9 EMA here. Chart 39, TLT 20-year bonds. Been in this channel for quite a while, since the beginning of the year. Rallied up to basically the top of the channel. Little Pinocchio move, head fake there, pulling back now a little bit. Chart 40, here's the 10-year treasury yield. Remember, this broke that uptrend channel. Market liked that. Then it's bounced the last couple of days. Logical bounce right off the 200-day moving average back to the 50. The broken channel line is now resistance. So that's an area to watch, guys. That is resistance. Next, we're just going to review only a few sectors here, guys. We got enough charts here tonight, so I don't want to cover all the sectors like we normally do. So here's the majors. XOK Technology did make a new all-time high, just like the S&P or in the NASDAQ. Last couple of days, it was a little weak, though. Driver 42, semiconductors. This has not made new highs yet. Down the last couple of days a little bit. Now, one area that's a little concerning slightly, to something to watch anyway, is the transports. Notice how these are well off the highs. And moving average ribbon's pinching there on the underside, so it could be trying to curl down again. This is something to keep an eye on for Dow theory, basically. Chart 45, XOP Consumer Staples. Remember, this made a new all-time high. Looks okay. Chart 45, Financials. This also made a new all-time high. It is setting up some MACD divergence here eventually, but you know, the trend is up. Chart 46, XOU Utilities. Remember, this sector's been on fire. It is quite overbought here. some slight RSI or CCI divergence. So this, again, this area's had a heck of a move. Jabber 47, industrials. Now this one has been struggling here. You could have a potential double top, or you can see how it's stalled at the resistance from the March, April highs, or it could just be consolidating for an eventual break to the upside, kind of like a cup and handle. We'll see. One to monitor. Jabber 48, XLE Energy. Remember, this area had pretty much a perfect ABC pullback into the 50-day moving average, into the support zone. Last Friday, breaking the channel to the upside. Jabber 49, ExxonMobil, one I've been showing. The previous week, I mentioned the dividend on this. So as long as you held this stock coming into May 14th last week, you would have received that dividend. This pays a quarterly dividend. But again, it basically had the same pattern as XLE, kind of like a three-wave ABC pullback into the 50-day. So it was a pretty easy technical buy, and you had that dividend coming. And so I had bought that to get that dividend and also the price movement. Next, Jabber 50. This is the Chinese ETF, triple ETF, and this is at a powerful move. I talked about it back here in April. You got a coil, tight moving average ribbons. Whenever the moving average ribbons are tight, that's when you get your explosive moves, guys. That's why we like these ribbons. Anyway, strong move up. It's now into this supply zone where it may finally start to, this is an area to maybe take in some profits if you haven't done so. It's had a hell of a move. Jabber 51, Baba, one I've been showing, one of the individual stocks, Alibaba. I love the falling wedge on the weekly. And remember, this broke out over a month ago. And nice move up last week, up 10.6% on some expanding volume. Next, let's move to commodities. Here's DBC, that's the index. These are some of the holdings. And similar look to the XLE, honestly. ABC pullback into major support, broke out of this channel last week. Jabber 53, here's the weekly chart, up 1.85%. Remember, we got this big weekly coil forming, so a big move could be coming in these commodities. If it's to the upside, which I think it probably will be, it's not going to help Powell. Jabber 54, there's the monthly chart. You can see that coil really clearly here. Moving average is pinching. MACD is recycled back to zero. Not pretty for inflation. Jabber 55, crude oil. Now, crude oil did stall in April at that supply zone, pulled back. Now, the stocks have held up much better, as you just saw with XLE and ExxonMobil. This last low here at 76.70 had some RSI divergence. Again, it's got quite a bit of resistance above from the declining 20-day, 200-day moving average, 50-day, but let's see if it can curl the upside here. Usually crude oil, does well in the summer, so we'll see. Jabber 56, here's the weekly chart. Again, long-term support is this 200-week moving average, which crude oil has continued to hold. Next, Jabber 57, natural gas, up 16.6%. Massive gain. Again, really nice move off that 150 area. Remember, that support went back to 1995, so it's a big level. Here's the chart we've been showing, UNG, that's one of the ETFs for natural gas. Just continues to move up. That wedge pattern has played out phenomenally. Beautiful wedge with MACD divergence. Guys, true wedges always have MACD divergence. That's a pro tip, little technical analysis info for you. And here's that monthly chart of natural gas. Like I said, that 150 area, big support going all the way back to 1995. That's always a good area to go long with a stop. Next. Jabber 60, copper. Up and away. It looks like it's going parabolic essentially, not helping Powell on his inflation front. Jabber 61, here's the weekly, up 8.3%. That's a massive move for copper in 1 week. We pointed out this coil pattern early in the year, and that has played out amazingly. Again, there's ETF for copper. You could have played this, or some of the individual stocks. Jabber 62, DBA agriculture. As I stated in the opening, this is one of the areas that have been weak. Again, this had one hell of a run from the January area where we went long. up to the 26 area. It got very overbought, RSI divergence, MACD divergence. Nice correction, bounce up, lower high at that fib, pulling back. Now, if it loses the support, guys, there's a big, big demand zone down here. And I think that'd be a good area to buy this back. Chart 63, here's the monthly view of DBA. Again, why did it pull back besides being overbought? Price got into this supply zone going back to 2014. So it was a logical area to pull back. Plus that shooting star doji was kind of an ugly candle, usually near some sort of topping inflection point. Next, chart 64, uranium up 4.6% for the week. Nice break out of this coil. Chart 65, here's the daily chart. Nice move, especially on Friday. Good volume on Friday. Chart 66, uranium on the monthly chart. Again, my target really longer term is up in this area in the 40s, mid 40s, in this supply zone going back to 2012. If you're new to Breakpoint trades, I became bullish on uranium way back here in 2020 when it broke that multi-year base. And then last year when it broke the coil. Moving on, let's look at crypto. Here's Bitcoin. Bitcoin had a nice move after taking out that resistance. Though it is pulling back here this weekend. Looks like it's down about 1% this week. You might want to keep an eye on that. Bitcoin tends to follow the indexes, especially the NASDAQ. Bitcoin's not a safe haven, guys. It's more of a leverage play in NASDAQ, okay? Next. That said, here is Ethereum. Ethereum's one to watch here. It has sort of a wedge look to it. One to watch here. Next, chart 69, MSTR, MicroStrategy. We pointed out this inverse head and shoulder pattern. This is a crypto stock. Boom, big play. Hope some of you guys bought this early last week. It's had a nice percentage move. And chart 70, here's the 60-minute chart. Again, you can see that inverse head and shoulder has been playing out. Finally, chart 71, here's another one to watch, CLSK, Clean Spark. Now, this is a weekly chart, but if this wave count is correct, in blue, this would be some sort of wave 4, and you get an eventual thrust up in a wave 5. Again, this is a weekly chart, guys. Next, chart 72, US dollar, down 0.8% for the week. Remember, stalled at that resistance area. Got a big support here coming. We'll see if that holds or not. Chart 73, here's the daily chart. Again, we're still holding that uptrend support for now. Keep an eye on that. Next, chart 74, Japanese yen. Remember this, Japanese yen has been taken to the woodshed severely. Basically took out the 1998 lows. There is a wedge forming here with some active divergence though. But for now, it is in a very strong downtrend. Chart 75, let's move to precious metals, which I already discussed in my last video. So hopefully you watch that. So I'm not going to go over these extensively, but I'll do it a little bit. So here's gold up 1.8% for the week. It hadn't taken out the previous all-time highs. Let's see if it can do that. If it does, then it will set up it'll set up some divergence. But nice move out of this consolidation pattern. Chart 76, here's the daily. And it essentially had an ABC pullback there from April. We're moving up again. We haven't taken out that spike high yet there. The ratio of the GDX to GLD still looks pretty good. Chart 77, there's that monthly chart, my bigger picture view, cup and handle that we broke out of. We're in this wave 3. Again, my target over time is 3,000. But we're not going to get there without a pullback along the way, guys. Next, chart 78, looks like some of these charts got out of order. Here's GDXJ, some of these individual ETFs. This is GDX Gold Miners. Broke this long-term weekly trend line back in March. This area up here is a supply zone that's probably the first major target. Anyway, sorry about that. They got out of order, guys. So chart 79, SLV. This is silver ETF monthly chart. Remember this monthly coil I was discussing earlier in the year? Busted out big time. Up 19.7% this month. Next major target is this supply zone going back to 2012. Over time, I expect this to go and retest the 50 all-time highs. Driver 80, here's the weekly, up 11.7% last week. Just a massive move for 1 week. Again, beautiful textbook ABCDE coil that it busted out of. Driver 81, here's the daily silver chart. Again, on Friday alone, silver up 4.6%, massive move. By the way, this area I marked here is now a demand zone, a support area on a next pullback. But you can see just absolute textbook on silver here. Ascending triangle broke out in late March. ABC pullback, back tested the previous resistance, became support, then rallied again. Now this next high could set up a MACD divergence, so keep an eye on that. Driver 82, looks like I got another chart of duplicate chart of SLV here, but that's okay. I love this monthly chart of SLV here, just gorgeous textbook. Next, here's the bigger picture view of silver that I discussed in my last video. This chart goes back to the 1970s. Remember, silver has topped out at essentially $50 twice in its history. Once in 1980 when the Hunt brothers tried to corner silver, kind of like the Duke brothers in that Eddie Murphy movie, Trading Places. You know, failed spectacularly, came all the way down, based out, retested essentially 50 again there in 2011. That was the end of that bull market. But we've had a nice breakout from a coil. We're now into the first supply zone. I do think silver is going to make it back to this area over time again, eventually break it. I think the third time will be the charm. Here is a monthly chart, a logarithmic chart. Again, you can see those all-time highs. If you look at the logarithmic, it's kind of like could be a big, massive 44-year ascending triangle pattern. So like I said, I think the next time silver gets up to here, around 50 bucks, I think it's going to break it. Next, chart 85, here's the monthly linear chart. Next, looking at the gold price of the stocks, the miners, here's GDX weekly chart up 4.6%. Nice move out of that coil. Note, it is testing the weekly downtrend line here. Now, if it can clear that, the next target would be this little supply zone up in here, 39 to 40. Chart 87, here's the daily chart. Again, hella buy there on March 1st when this channel broke. You had your confirming signals here. Also, the BPGDM system confirmed there. Nice move. I didn't adjust the MACD here, but there is a divergence setting up here, so be aware of that. This could be some sort of fifth wave move in the short term. Chart 88, here's the BPGDM system. Remember this, the mark GDX has made a new high and this still hasn't flipped back. Now, why is that? Again, this isn't perfect, the BPGDM. It's damn good. It's been really good signals. But these trending systems like this they're really good about catching these wave threes, and that's essentially what this is. So essentially, you know, maybe get a whipsaw on a wave 4 or 5. So I had some questions about that, so I wanted to cover that. Next, some of these individual mining stocks. Here's POS. That's the major silver stock. Again, hella move out of this pattern. I went over some of these weekly time frames in my last video just to show you where some of these could go over time. You know, for example, there's a big supply zone up here, and I think over time it'll make it up to there. Chart 90, SVM, another silver stock, a little lower priced one. Rallied off that big support zone. You got a resistance area above here to watch. Chart 91, KGC, again, just going over some other individuals. These have been on a watch list for the last several months. Hella moves on these. Hope you caught these. Beautiful move out of this little ascending triangle pattern. Quite overbought now. Look how wide that moving average ribbon is. So don't chase it. Again, when the moving average ribbons are pinched like it was back here in March, that's when you get your big moves. When it gets too wide, that's when you're due for some mean reversion pullback action. Chart 92, IAG, IM Gold. Again, beautiful move out of that tight coil. Now it's a bit extended. Chart 93, EXK, silver stock, hella move. We bought this back in March. It's essentially doubled. Jumper 94, RGLD, Royal Gold, another major one, hella move here. Jumper 95, GOLD, Barrick, back tested that support in early May, and it's been moving higher. This one I showed last week, US Gold. It's a small one, really nice pop last week. Big move. Look at that massive volume. Don't chase it now. All right, going to follow up on some recent ideas that are non-precious metals. So Apple, it's been a great move out of here. Hasn't went back to the highs though. Be aware of that. Jumper 98, AVGO, broke out last week, pulling back a little bit. The broken trend line is now support. Jumper 99, GE Aerospace, rising wedge that played out that we gave this as a short 2 weeks ago. I went ahead and shorted this back last week after the little bounce. If it loses this area, I think it comes down to the 50-day moving average. You have some nice MACD divergence that confirms that wedge. Jumper 100, STNG, again, these longs we've had on the list just continue to power higher. My suggestion would be just to trail the stops up, maybe below the 9 EMA. Same for BIIB. It's been a nice move out of this little flag. It pulled back a little last week as it got near that 200-day moving average. Jumper 102, SLQT, another beauty that moved up, finally pulling back again, guys. Some of these, you might want to just exit them just to take profits as they've had hella moves, free up some cash. Jumper 103, FE has also been a good trade. At this point, I would put a stop just below the 9 EMA, quite honestly. Jumper 104, TMDX, same deal, hella move. Just trail those puppies up, stops. Jumper 105, Starbucks. Remember, Starbucks got hit on those earnings. I put this out as a long 2 weeks ago. It was a CCI bungee play off the CCI divergence and with the trigger off the doji. Main target was the 9 EMA, which it achieved. But what happened is price simply consolidated a little bit, flagged out, and a big pop on Friday, not surprising. Jumper 106, Irene, long idea from one of our subscribers from early last week, had a nice pop out of the coil. Congrats. Good pick by him. I played that puppy. And the final one, Jumper 107, LU, along from last week in this coil pattern. Slight poke of the coil on Friday. I'm long a little bit of this with a tight stop. All right, guys, futures are open now. And it looks like futures are up about, futures are up about 6 points. And what is gold? So both gold and ES futures are up about 6 points. That's nice. We'll see where they fare tomorrow. Have a wonderful rest of your Sunday evening. I'm going to take off and go see my mom on her birthday. Take care, guys.